Modest gains today, but we've got problems with oil still below $50. Look at the sector leaders here. Remember, the story is very simple. $50 to $60 oil going into 2017 is what people are anticipating, and we're having problems there. Problems with OPEC, problem with the non-OPEC countries agreeing on production cuts. It's just not there. Healthcare has been a horrible month. My concerns about regulation. Industrials, technology. Technology's had a little bit of better month. Overall, earnings not that bad in this sector. Behind me, we're waiting for Adient to open. They rang the bell. Johnson Controls is spinning off Adient. They're that automotive seating business. Johnson Controls is very big in that area. Johnson, of course, will be a new company specializing in construction and the energy business. They've always been in those businesses, but now spinning off and waiting now for Adient to open down here at the New York Stock Exchange. A lot said about the Baker Hughes GE deal. I'll give you my 2 cents on it. It's very simple. When you had Halliburton and Baker Hughes, the old deal that did not go through, you just had one less supplier. But we have GE and Baker Hughes. What you get here is an improvement in the overall value proposition. So with GE, you get more emphasis on technology. You get more software and less hardware. Put up the next full screen. And that's really the key point here, I think. That's why people are really happy about it. You get services from GE that will improve efficiency. You can't just have oil services anymore. You have to improve the efficiency. It's not the number of rigs necessarily, it's how efficient those rigs are. So you've got a menu of products that GE might be able to offer that will enhance the performance. You can't just sell a commodity anymore in the business. It's not going to get anyone to the promised land. High tech with the commodities business, that is what people want, and that's what this deal offers. Why you're hearing people say so many positive things about it. And there's Adient, by the way, just opening right above me, up 1.3% behind me. We are in the last trading day of October, and it has been a bit of a disappointment. We're down 2% overall for the month. The S&P 500 is the worst showing since January, believe it or not. And look at the Russell, down 5% overall. And if it wasn't for financials, we'd be in a lot more trouble. Take a look. Banks had great earnings overall, and that's why they're on the upside. Most of the tech stocks also had decent earnings. These are the 2 biggest sectors, and this is why we're doing so well overall. We're not down more, but consumer discretionary, retailers have had a tough time. Home builders have had a tough time. Healthcare has been horrible. Pharma and biotech's been terrible. And anything interest rate bearing like REITs or telecom stocks have had a very tough time of it overall here. So a number of those trading firms, because of this terrible trading environment, have had an ugly time. Virtu, ITG, KCG, anything that's trading, because there's not a lot of it, has had an ugly time overall here. Asset managers as well, very, very tough month. Guys, right now the Dow up 2 points. Back to you.